Hey, what's going on, everybody? Welcome back to another video. In today's video, I want to go over a popular closed-end Canadian fund. This is Canoe EIT Income Fund, one of the largest closed-end funds here in Canada. Super popular, very stable. It's been paying dividends for a very, very long time. However, one thing about this fund is that we've seen some crazy, crazy price growth that has been pushing down the yield because the thing with Canoe EIT here, guys, as you can see, it's trading for over $17 a share and it pays a 10-cent dividend. Now we're going to jump into the fund, some alternatives, what you could do as an investor if you're looking for higher yield. But first, guys, nothing here is financial advice. I am not a financial advisor. And if you could go ahead, hit that like button, I would really, really appreciate that. Now, Canoe EIT, like I said, it's been around since 1997. It's been paying that 10-cent dividend forever. It's never missed. However, with the price growth, unlike various other ETFs, especially higher yield ETFs in the income space now, it does not change this target distribution. It stays at 10 cents per unit. For some people, maybe they like that. However, I think it's a little bit unnecessary with the crazy price growth that we've seen here, right? And you can see the total return on this fund is very, very impressive. Here's some of the holdings, guys. It's basically split in between the US and Canada. We're going to kind of look at that right now. They've got 51.3% in Canada, 45.4% in the US, and 5.6% internationally. This fund actually does use leverage. They don't, easily advertise it on here, but it is a closed-end fund that does utilize leverage. As far as sectors go, we've got 23.7% in financials, 22.8% in energy, 22.7% in industrials. You've got a bit of healthcare, 8%, 6.5% consumer discretionary. You got information technology coming in at 6.5%, materials at about 6%, and then consumer staples at 3.8%. Now, guys, this is a great fund. I actually own it. It's been a very, very good performer. However, like I said, guys, that yield has been getting pushed down. So if we look at Canoe EIT, you can see here the price growth alone is over 12.7% for the last year. And if we look year to date, we're basically, 10% price growth year to date already. However, when you look at the portfolio distributions, you can see here under income down at the bottom, the dividend yield is currently sitting at 6.9%. We are actually under 7% yield for Canoe EIT now. And it's looking like that's going to continue to get pushed down as that price continues to move up, right? So what can you do as an investor looking for higher yield? Well, there's a couple things that you could do. I've actually considered all of them. The first one is you could take a margin loan out on your shares. So if you're like me and you've been holding Canoe for a long time, you probably have a great share cost basis. Like, for example, my cost basis is $13.59 and it's currently trading for $17.26. So you have a lot of room if the market were to take a dip, right? So you could take some margin out, buy something higher yield. The second option is, of course, you could just sell it, buy another higher yielding fund. That is another option, and there's plenty of them out there. We're actually going to look at another one that's very close to it that I like to compare, which is HDIV. HDIV, if we look at what it holds, it's actually very similar to Canoe EIT, but also different. It's not a closed-end fund. It is an ETF, but we see it's got 35% financials, 12.7% utilities, 14.4% technology, over 15% in gold, 13.8% in energy. They got a bit of real estate, just over 2% as well, right? Now, HDIV, it hasn't been around as long as Canoe EIT. However, they do have many years of paying distributions. The main difference here, guys, is that those distributions have grown over time. You can see that they slowly trend upwards. So, if you're an investor that's spending all of your income, it is nice to know that you will still continue to get pay raises as time goes on, even if you're not buying more shares, right? That, in my opinion, is a pretty huge thing. And HDIV, you guys, they sit around about a 10 to 11% yield usually. I don't think they go much below 10% because Hamilton usually raises that distribution, right, to keep those yields a little bit higher. So if you're looking for a higher yield, a higher income, I would say that HDIV is another great alternative. So if you were an investor looking to sell your shares, you could go into something like HDIV. I actually plugged it into this calculator that I just recently found. Shout out to Oldfish. He's another YouTuber on here, but I saw he had a dividend calculator. So I figured I'll try it out this time. And you can see here, I did a 5-year comparison and basically the total return, this is with dividends reinvested, on Canoe EIT is 112.8 and HDIV is 113.69%. So they're super, super close with HDIV actually just slightly beating it out. HDIV, you guys, is a very unique ETF. So in my opinion, I'm really considering swapping out Canoe EIT for HDIV because I consider Canoe EIT to be an anchor in my portfolio. When things dip, like you can see here, back in April, we were at 14.29, but it really only dropped from about 15.29 down to it dropped about $1, right? So it really kind of holds your portfolio together when you have things like HHIS or Big E or some of these other stuff. You got something like Canoe EIT to hold your portfolio together. So I'm considering selling off Canoe EIT and get into something like HDIV, which could still be used as an anchor in your high yield portfolio. Because at a 6.9% yield, I don't think that Canoe EIT really is considered a higher yield fund. It's not even it's trending closer down towards the 5% now than it is that 10%, right? It's a great fund, great total returns and everything like that. But again, if you could get basically the same returns, maybe even slightly better, with a higher yield, I would say that HDIV would be the way to go. So if you're an investor that holds Canoe EIT, let me know what your thoughts are. Let me know, would you consider trading it out for HDIV, or is there any other funds that you would consider swapping it out for? Also, like I said, guys, that margin loan could be another interesting way to get a higher yield if you were interested. And then the third way is simply just keep it, right? And that's what I've been doing. The third and easiest way, if you don't want to sell it, is just keep it and take those distributions and put them towards something else. And that's what I've been doing, right? So if we look at the distributions here, Canoe EIT pays me 425 a month, and I just buy something higher yield with it, right? So if you're at a 7% yield on Canoe, you could buy something like HHIS with a 30% yield to really, bridge that yield gap. Or if you wanted, you could just buy a different fund that's in the middle, something like an HYLD or an HDIV to be in that low teens. Personally, I like to buy something higher yield, so I'll probably be buying mostly HHIS or like QDay to bridge that yield gap. So that's basically the third and final option, guys, is just keep it, let that price continue to grow, and then use those distributions for other high yield funds. Let me know what you guys think in the comments here. I'm very torn between trying to keep it and utilize those dividends for other ETFs or swapping it out with HDIV, because even if you were to swap it out with HDIV, you could use the same strategy still, buy other higher yield ETFs with those dividends if you wanted. Anyways, guys, I hope you enjoyed this video. Let me know your thoughts down below. If you're a holder of Canoe EIT, I would be curious to hear your thoughts. Catch you guys in the next video.